Welcome to another market update. It's August the 28th, the Sunday after the market closed on the 26th of August 2016. Looking at the bigger picture there, we will start off with this. We can see where we are now after a very long bull market. This market looked like it was going down for a while. Now it seems determined to just keep on pushing up on higher. So if I zoom in a little bit, I mean, obviously, the reason I show this is because, bull markets don't last forever. At some point, this market will go down. That's just not happening yet. Meanwhile, there's money to be made. As long as we get things right. As I identified last weekend, here's the market sort of broke out to a new high and curling over there to, which actually would be quite healthy from a bullish point of view. Here's that sort of breakout resistance line there. If it turns over and then hits at about 2140 even or something around there and then bounces off again, that would actually be a very healthy picture. But it is rolling over, as you can see, and that's what I was explaining last weekend. And that's we had the market was waiting for a big Federal Reserve meeting on Friday in the States, and we didn't really know what to make of it and didn't come out any the wiser. But here's the situation now. We had a kind of short-term support level around 2175. It did break below that. And now there's another one waiting here at around 2150. As I say, so as you look at the RSI here, you can see it's kind of a no man's land in the middle. So what happens next? That's really at this juncture, it's hard for me to say the direction. It's a lot depends on what happens with this week. So I'm pretty neutral on the short term market direction. Long term, as in like a year on, this market is going down, but has a long time off from now, and I think there's going to be some bullish action first. What happens this week, then? I think that's really going to determine next weekend. I'll be in a better position to say, what the short term trend of the market is. Right now, it's pretty neutral. It could go either way. I think it's probably perhaps more likely, and it would be healthy if this market, corrected just a little bit, came down here into maybe like this whole 2120 to 2140 range, and then moved on from there. That would actually be a healthy sign of thing. The signs that you might look for to think, the market is definitely taking a breather, is if we see this line here broken around sort of 2155. If it holds above that, then no reason why I can't just keep chugging along, and there's no reason that my market doesn't have to correct by going down. It can correct by just going sideways and absorbing the gains for a while, and that may be what happens. Also look for the RSI here, for the Q here. If that goes stuck below 45%, then that's definitely a cue that the market's headed down in the shorter term. Likewise, above 55%, it's going to keep on climbing higher. So neutral picture on the short term. Longer term, I'm still bearish, and so that concludes that's all I can really say for this week. Frustrating, I know, but that's not to say that individual stocks aren't very some certain ones aren't very attractive right now, and that's the sort of thing we'll be looking at next with the 99 Club video.